Well, good afternoon, all. Thank you for being here with this amazing panel discussing the NPLs REO market, especially in Portugal. We have an amazing panel here with very important personalities from our market. So I will start introducing them, and then they will speak a little bit about their track record and basically why they are here. Not in any particular order. So I will start with José Araujo, that is currently the Director of Real Estate Assets and Millennium BCP. So José, if you can introduce yourself, please. Thank you.
Well, very briefly, thank you for the invitation and to be here with all of you. I'm a banking guy. I have more than 35 years in banking, from commercial to marketing, and in the last 10 years, I've been the manager from the distress assets and from the REO assets that are in our balance sheet. So I'm very happy to be and to participate and share a little bit from the Portugal view about NPLs and REO. Thank you.
Thank you, José. Thank you very much. So now passing the word to Francisco Virgolino, that is the head of NPL in REO Portugal at Prime Yield. Francisco, good afternoon.
Good afternoon. So as José said, I'm the head of NPL and REO in Prime Yield. I joined Prime Yield 12 years ago and been a bit around, and since 2017 I'm the head of NPL and REO. Okay, so all transactions for the last 3-4 years have been passing through my computer. So all the major ones and all the banks, including Millennium and others, of course.
So Francisco, probably the gray hair comes from that, no?
Yeah. Significantly increased the last 3 years.
Okay, thank you, Francisco. So now Marco Freire, the Managing Director of Araujo Global in Portugal and board member and at White Star. Marco, good afternoon.
Hi, good afternoon. Thank you for the invitation. Hope all are well. So as you mentioned, José, I'm the Managing Director for White Star and Araujo in Portugal. Currently, I'm responsible for the underwriting and portfolio management division. I have been within the industry for over 20 years with roles such as CFO, COO, around the NPL and real estate market.
Thank you very much, Marco. And not for the least, but Gonçalo Castro Ribeiro, that is partner at DLA Piper. Gonçalo, good afternoon. Can you please
Hello, good afternoon.
Thank you.
Yeah, thank you. Good afternoon to all. Yeah, and again, thank you for the invitation. Yeah, as you mentioned, I'm a partner at Finance and Corporate Law Department of DLA Piper. And have almost 20 years experience with corporate transactions and the financing transactions, and also in the restructuring arena. And with that, also of course within the NPL market extensively in the last years.
Thank you very much, Gonçalo. And just well, one final word about myself. I'm the managing partner of Aura in Portugal, and I'm partner of Aura Spain, Italy, Greece. I'm also the chairman of RICS in Portugal, and I work in real estate valuations and advisory from the last 25 years. As Francisco, we were together involved in all the portfolios that came into the market in the last years. So less gray hairs than Francisco, but they are here.
You have the beard.
Yeah. So the idea of this talk is basically to discuss how the NPL market is currently in Portugal, how we are moving forward in terms of the market, the interest of the players. So I try to put in some of the reflections that we will discuss here today. Basically, what are the questions in the mindset of our viewers and how we can help them to be more clear in a situation like this about what is the current market situation and the forecast. We don't have crystal ball, but the idea is to how we will look at the future and the predictions. So my first question, and I will start with José Araujo, because it's more focused on the banking system, is that we all know that in Portugal, all the big Portuguese banks have suspending more than 24 billion euros of corporate loans repayments until September this year. So the moratoriums. How do you think it will be the impact of in the market of these moratorias, of this suspension? Do you expect a huge increase on the NPLs? How you are dealing with these and you're thinking about this, José?
Well, as you told us, we don't have the crystal ball, but we believe that the situation is not be so dark or so gray as everybody could think, because our president spoke this week and tell that maybe a part of those moratories can be extended a little bit, special from the sectors who have been suffer more with a pandemic situation. We can split it in two parts: the individual side and the company side. From the individual side, it depends. So how far the money from the European community will arrive to support the companies, because the companies are the one who have the works and the people. So if the unemployment is not growing so much, we believe that will not affect so much the portfolio from NPL of the bank. Maybe it could affect a little bit our numbers, our figures is not more than 5-10% maybe. If from the moratoria, from the number of moratories that we have on the mortgage side, and that is not very much. And even so, the banking system and ourselves, I can speak for ECP, has some plans for the people who have more difficult in that time. We are not worried. Really, we are not worried from the part of the mortgage side, from the end of the moratorium. From the other side, of course, we have also exposed to some sectors, and if the sectors will not be extended, of course, every system is going to suffer a little bit from those distressed assets. The sectors that we are more afraid, of course, it's not afraid, but that we are already working in preventing, because the banks, the BCPs, since the last 3 months from 2020, have been preparing a plan to react and to predict the companies that could be in more problems. Of course, the area of the hotels, the shops, the restaurants, a little bit the retail, that are the areas that can be suffer more with the end of the moratorium. And the banks who are more exposed to that areas could have some problems. That's why I told you that we are already working with some of those companies and some of those enterprises to predict and to see how we can help them and save them. So we predict that the impact should be much more on this side than in the side of individuals.
Good. José, thank you very much. And this is also very connected with my second question, and I will start with Marco. Marco, you buy portfolios, you manage portfolios, you have a very good connection with this NPL and REO market. How do you saw the national and international investors reacting to the pandemic in the things that were undergoing and the investments? Do they have any preferred segments they would like, then they change with the pandemic? How do you see this movement happening?
I mean, I would say that investors kept their confidence in the Portuguese market. That was very clear on the portfolios that came to market after the pandemic last year. They all had high demand and very competitive bids. Fortunately, we won the three portfolios that we participated on. Liquidity is there. The appetite to invest in the NPL and real estate sector in Portugal is still there, with no, I would say, with no specific changes in terms of sectors due to the pandemic. On the existing portfolios, what we have done and what we saw other investors do as well is implementing a set of strategic initiatives to mitigate the impact of the pandemic. So, for example, on the NPL secured space, there was a focus on releasing cash in court while the court activity was suspended. On the real estate side, we did some price reductions for certain asset types to anticipate negative HPI that we are foreseeing, especially in the commercial, retail, and office space. We have converted some sales into rentals to increase the money multiple while the activity or the market is slower. On the unsecured NPL space, we promoted massive discount campaigns to accelerate collections, and we have significantly reduced litigation of these segments, because we believe the return on investment on that litigation will come down in the near future due to the increase on the unemployment and the more adverse macroeconomic scenario that will follow.
Thank you very much, and we will discussing litigation. So I need also the opinion from the legal side. Gonçalo, what do you think about this, about the interest of the national? What are your thoughts about international investors and the way they reacted to the pandemic regarding Portugal?
Yeah, I largely agree with what has been said. I think that investors keep an interest in Portugal. They have, as we know, internationally, there are very large pools of liquidity out there, so there is money to be invested. Some of those investors also have these deadlines for applying money, which make pressure and make them interested in the market and for deals. But also, to be honest, what we see is also the idea that if in situations where there is opportunistic situations or the value is very clear, the idea is to move forward. But there is also a lot of uncertainty, and so there is also the idea of waiting and see in some approaches. Because, and specifically in Portugal with this last wave, I think that there is still uncertainty in the market. But the overall idea, I think, is also that the portfolios that exist are of good quality. So when we have more visibility on or when we have less uncertainty in the market, the expectation is that deals will be done because the interest is there.
Thank you, Gonçalo. José Araujo, I also need to ask you this because BCP in the end of last year basically put some couple of portfolios into the market. So it's one of the banks that has the experience to have this feeling about these investors. How do you think? What do you think about the appetite of these national and international investors regarding the market? Do you think it's still there, or even more, or how it reacted with the pandemic?
Well, I'm more on the side of REOs and not so much on the NPLs. But on the REOs, we only made in the last 10 years one portfolio. was not a big portfolio because we have a team, and the investors and the individuals have been bought in the last 10 years a lot of assets from our balance sheet. And last year, when we tried to see how it was the market from portfolios, what we saw was that they are only opportunistics in the market, because the price they offer is because of the incertitude of the pandemic. They were trying to buy what in 1 year we believe that the market will return, and they will win more than 60% or 70% what they will try to buy. So we didn't go to the market for REOs, and what we see is a lot of investment funds still buying properties, individual properties, and a lot of land searching for build to rent, for co-living, for media market individuals around the cities with the teleworking and the people looking for individuals also houses in some plots of lands. So that market is still very, very, very hard and very dynamic, and we saw that. For offices also, the office markets still are open. They look at some indefinitions because they don't know exactly what they will want, because they think that the people will start working some days at home, but they also need to go to the office. They are not sure if they need small office or the same office with a different layout, with more space because of the pandemic, and with another facilities to capture the people, and because of the culture of the companies and the young guys, because when we work at home, those two last issues is more hard to have. So on the office, it's a little bit balanced in wait and see, or buying now, and to have the best place is not clear. For apartments, the market is going on, maybe a little bit different because with the less tourism and the foreigners cannot travel so well. So maybe the Portuguese market has restarted again to be the buyers. But the investors and the liquidity and the credit facilities are still in the market. So as Marco told us, and also Gonçalo, that's a part of the time that been stopped, but they will start, and they already start for the future. About NPLs, I think the market is still on. I think there are also market this year and from the next years, because the level of NPLs that the banks have in their balance sheet, it's higher compared to the other countries of Europe, and I believe they will continue selling, maybe not with so much opportunistics, because they have, at least the Millennium has a strong balance sheet and can wait for the normal prices of the market. But we feel that the market will be open and alive for NPLs this year, along the years. And normally, when the year will end, 3 or 4 portfolios will happen, and half of the year also some of them could happen if the pandemic or the constraints, the strong constraints will finish in the end of March. We have 3 months for those portfolios. So we are confident that market is alive.
Thank you, José. Francisco, I need to ask you this. A couple of questions for you. The first one, and also regarding these national and international investors, did you saw in these last months a change of the faces of the guys of the investors coming in, or are the same companies, the same investors, or see new guys coming in, new interest in Portugal? That's my first question for you. And then my second question for you, we are valuers, so I need to ask you this. How you forecast the prices in Portugal? Do you see any adjustments on prices? How you are advising your clients, which segments? So if you can elaborate a little bit about that also. Thank you, Francisco.
Yeah. About the investors, basically, they are always the same. Some new faces came around in 2020. At least for me, I didn't know them, and some that win the ZIP portfolio, I didn't know them. I think if it's not their first deal here in Portugal, it's one of the first. So that shows that they are interested in Portugal, as it has been said. What I think is that the banks are not putting so many portfolios out, so the investors are there, but they have no product to deal. But that's what it is. About the segments that we are looking at and how they are performing, I would underline two sectors. The logistic, of course, around Lisbon and Porto, that the demand and the deals continue to flow normally. So no big changes. Prices are okay, and absorption is doing well. And on the residential side, we have, of course, the pandemic slowed down a bit the market. There is a drop of 40% in transactions in 2020, facing 2019. And there we've noticed a change from the beginning of 2021 to the first quarter of 2020. In residential, the time to sell in our analysis has doubled. So if in the first quarter of 2020, you would take about, I don't know, 2 months to sell a house, nowadays it may take 2 months to 3 months, okay? So 4 to 5 months, sorry. So it has doubled. Also, we've seen some light adjustments on asking prices. Okay, so there's no big changes in askings, but what we've seen when we analyze the transaction is that the discount made upon these askings has grown from more or less from 5% last year to 8% this year. This goes aligned with what Mark said, that they had to give more discounts in order to sell faster. So I think that's the two main segments that are working well, and those are the characteristics of the market today.
Thank you. Marco, I need also to ask you this, because you manage a huge amount of assets, you sell, you also buy, and how do you think about the value of the assets and the portfolios and the liquidity? And do you feel the need to adjust strategies on the portfolios that were bought regarding COVID? How you manage this value or potential value issue?
Yes, so the value of the portfolios has deteriorated, mainly due to three factors. One is the HPI outlook. So we were projecting pre-COVID, we were projecting a very positive HPI outlook for all sectors, and now we are projecting a negative HPI outlook on the commercial assets, retail, and offices, and a flat HPI or slightly negative on the residential for the next couple of years, 2-3 years. which, I mean, dramatically changes, let's say, the valuation of those assets. Then I mean, as Francisco just mentioned, the time to sell has increased significantly, and as such, the weighted average life of the portfolios have also increased, and the IRRs have increased as well, because investors are in the midst of the uncertainty in the market and the higher risk, they are demanding higher returns. The unsecured NPLs were also highly affected. In our view, it's the segment that deteriorates the most, because it's highly linked to the macroeconomic environment, and especially the employment rates and or in this case, the unemployment rates and the available liquidity, which is going to be quite detrimental for those unsecured recoveries. So, I mean, although we believe that in 18 to 24 months, we may start to recover and get back to pre-COVID scenarios, the outlook until then is detrimental in terms of pricing or valuation because of these factors I just mentioned.
Okay, thank you, Marco. Also regarding these, José Araujo, I would like to ask you if you, BCP and your department is well known in Portugal to selling in aligning with the prices you already had. So did you felt the need to adjust prices during these last months during the COVID effect? You already mentioned that some of the assets are more liquid than the others, but how do you are assessing these the values of the assets? Do you felt the need to do some adjustments or not yet from now?
Well, what we see is that we, in the last 3 years, already sell it more what we have in our portfolio than what are the new entries of properties. So what we are in the market in the last 10 years. So what we feel is that some of the assets that we have in our portfolio have already some years in the portfolio. And for that, because they have some constraints, could be urbanistic constraints or could be administrative constraints, we have to take care about the price. And in those kind of assets, we adjust a little bit the prices. For the others, for the news and for properties, normal properties, we didn't adjust so much the price. We still keeping, because the offers that we have been received in the last 3 months from last year and still this year, most of them are in the asking or very close to the asking prices. So what I agreed with Marco is that, and with Francisco, the decisions from some investors take much more care and takes much more time to go further. And some of them, like Marco said, they are asking yields, very high yields, very high tiers, and that are delay or even are saying that we are not selling because they ask so much return that we cannot go on that area. Of course, retail are the area where the discounts are much higher and where they're looking for more opportunities with a big different price. Office, no. Office, our offers that we have, we don't have so much office now in our portfolio. But the last transactions was on price, so the investors still believe that the price are correct. And logistics, we have some logistic also, but we are not the bank with more logistic in our portfolio. But the logistics, they ask more discount this year, so I think the prices on that areas will decrease a little bit. But on the other area, because new projects are arriving now on the market, because the promoters took a little difficult to put the new projects on the market because the municipalities sometimes delay a lot the license. They will arrive this year, and the offer is growing. And when we have more offers with the situation, economic situation, with no tourism and with no foreigners flying so much, we feel that the price could be adjusted a little bit on that side also, because the offer is going to grow. It's for Portuguese people. Portuguese economy suffers also, and the power of buying for Portuguese people is not so high. So there's a lot of what the promoter says in the newspapers in their interview is that they are still making a lot of pre-contracts during the way up of their buildings. If it is true, okay, but we see that the luxury, for me, the luxury houses will be the ones who suffer more. They say no, because with no foreigners coming, the Portuguese will arrive at one moment that they don't have more people to buy. That's what we see. But all the houses around Lisbon, around Porto, around the cities, the ones we receive, the ones we sell it as quickly at the price. So investors looking for different returns that the deposits gives at the moment, national investors, I may say, and also because some of the people knows that the banks, and still ourselves, we are not speculators. We have nice prices for second-hand houses, and they prefer that to make some works and stay there, than to have a rent house, because the rent housings in Portugal is not a market. It's not a big market. They're not a big offers, and we believe even with the municipalities election and even with a lot of places offer programs of accessible houses for renting, they will not be more than, I don't know if they reach 5% of the market. So 5% don't put pressures on prices. What puts pressures on prices are the other projects that are coming and the tourists. That's the ones who are pressing the price.
Gonçalo, for you, as you know, 3-4 years ago, we started this booming of NPLs transactions in Portugal and the interest of the investors. And one of the things that started happening more in last year with COVID was the secondary market and also the resales of parts of the portfolios. My question for you, it's basically divided in two. One is, how you foreseen this secondary market happening in Portugal, like is happening in other countries? So portfolios that were sold, then resell them with different kinds of groups of assets and groups of NPLs. How do you see this? And also, one of the concerns I see the clients mentioned today is the impact of all of these coronavirus crisis in the courts and the way you can deal with the insolvencies, with the recoveries, etc. How do you think this will impact also the strategies of the portfolios and probably the future of the NPL's portfolios in Portugal?
Thank you. Let me first, and I'll go to your question. Let me just first tell you that we feel, and from the talks that we have with clients, that this NPL market after COVID and already now is going to be very different from the NPL market that was the reality in 2009 and after the financial crisis. because I mean, the crisis is different. I think that we had a problem with what people called, rightly or wrongly, toxic assets there, and now the assets that are there, of course, and that has also to do with the price gap. The assets sometimes are very good and viable companies, very good assets, but with a problem that with the pandemic just lost their treasury or their capacity to stay alive. So it's going to be very different. That being said, on the secondary market, what we see is also what you've mentioned. Even the fact that we start seeing the funds that have purchased the assets, the first ones, have also legacy aspects to deal with, and so we see those transactions coming to the market, and we expect them to grow more, and in very different forms, be it with investment funds with assets inside being sold, as we know is an issue in the market right now, or things being sold on single name basis, for instance, or even specific assets, large assets that are being sold. And again, as I said, it's also very interesting that we see interest from investors. Many times it's in the asset and not in the loan. So the NPLs were sold to funds, and now investors interested in the secondary trades many times are more interested in the asset than properly in acquiring the loan. And so that's also something that we expect to see. And in terms of the effect of the pandemic, and more generally, I think that your question is a bit on how the courts will help investors to monetize their investments and to yes, I think that, well, COVID is having an impact. There were be it for courts that are closed, be it formally or informally, but people are not there, be it because the sessions in court are made through Zoom, which is great, but is sometimes not the same. Be it for the problems with actual enforceability, actually the agent that goes to enforce and to recover the assets has sometimes no means to get there, or gets there but that doesn't have people that give him access. So during the pandemic, I think it is what it is. I think it's not going to change much. After the pandemic, of course, there's a big debate going, and then there's reality. But or the current reality. There's a big debate going in Europe, as I'm sure that you are aware about the need to have more efficient, be it secondary market with a lot of regulation that we have some doubts about, but there's that, and there's also the discussion about the recovery of be it collateral or the recovery of debt, and those things. There's even a mechanism being discussed for extrajudicial enforcement, which I also have many doubts that will move forward. But if it does, going to change, it's going to be a revolution in that aspect. And then you have the current reality of the courts, that you have, fortunately in Portugal, some measures being implemented that assist that. The measures that are related to for instance, even the mass assignment of credits, although the law was a bit confusing in terms of how it was written, and I'm not going into that because it's specific situations going on, but it's helpful if it works as it's supposed to work, and also in terms of the restructuring measures that are there, and specifically for COVID, there is a special revitalization procedure that has been implemented now that allows business with difficulties to go in a restructuring process that is much more easy and with the help of shareholders, which is also important to give confidence to the investors, to the investors in debt. And we see that, and those measures are there. And then the normal measures that we implement all the time in the agreements that we place. Of course, that collateral that is provided must be good. It must be in a good situation in terms of insolvency remoteness, which is not always the case, and even the contractual security that is given between the parties, seller and buyer, is very relevant, and so that's how we see it. We see measures already there. And one other thing that I think is important for the Portuguese market and going forward is that we see that there is more sophistication, so to speak. I don't like the word that much, but I think it's normal because the market was none. There was no market in 2005, or there was a very little market in 2005 on the big transactions and the securitization of tax credits and all that. But the NPL, so to speak, was not a market. And I think that players learned meanwhile, and now even in terms of processes of how the assets are managed, it has nothing to do. And even the process of the sale of an NPL portfolio is much more developed now. So I think that's also a point.
On it, a few comments for remark what Gonçalo said. Without the pandemic, if we take in our bank more than 3 years to recover something that is being occupied, or if they go for insolvency, and with the pandemic, everything stops, and they put more laws that protect those kind of son of those people. Yeah. So we believe that the assets to arrive again in the portfolio, even with the end of the moratorias and of the layoff, will take, if they don't give the banks normally the asset, that will take more for 2022-23 the problem than itself for these years for the banks, I believe.
Yeah, well, it makes all sense. We the advisors, we feel the same. Marco, I also need to ask you this, because you are in one of the companies, if not the company with more tradition and age of experiences dealing with NPLs in Portugal, and you already passed through several crises. I'm not telling you are old, but this is not the first one. And what do you think about this legal environment and also this potential for the secondary market? What are your thoughts about this?
Before I answer that, let me just add to what José Araujo said previously about the real estate prices. I would say that as long as the banks continue to fund the Portuguese or the local demand at good conditions, as we are witnessing now, low interest rates, low spreads, etc., we have enough domestic demand for the granular product that we have on the market, and so those prices shouldn't be that much affected. And I think that's one major difference when comparing to the 2008 global financial crisis, which is, I think the players learned with that crisis, and we don't see the players running to the market and reviewing or haircutting prices first instance, which I think it's the intelligent way to go. We don't see the banks cutting or shutting down funding, which again, it's the way to go and to sustain the domestic demand. So I would just add that, which is, if the banks continue to fund the domestic demand and the economy, I think we will be okay in the granular assets in terms of prices. In terms of the, the legal framework in the NPL recovery, etc. Let me just point out that Portugal made significant improvements on the legal framework over the last decade or so. And it's a much more efficient system, although we are always complaining. It's a much more efficient system than in other countries like Italy, Spain, Greece. And just for, the audience to have a sense of things, for instance, the introduction of the judicial portal, CITIUS, that allowed for the digitalization of files was very important. The delegation of authorities to the execution agents and the bankruptcy trustees, taking some of the decisions and administrative work that the judges had was quite important to improve the timings. The introduction of the electronic auctions to promote collateral sales, as Gonçalo mentioned, the automatic / massive creditor substitutions at no cost in case of the securitizations. It's an important measure as well. So I think very good measures have been implemented. But that said, there are still much needed improvements. The boarding and litigation of NPLs in Portugal is still quite expensive. For instance, one thing that we are always complaining about is the mortgage registration costs of in the purchase of a portfolio, an NPL portfolio in this case. We believe that the mortgage registrations should have a cap in terms of total cost, instead of being 225 euros or 250 euros per collateral, which doesn't make sense in a huge portfolio transaction. The legal fees, as you may know, in Portugal, are higher for what are so-called the big litigants, which we are one of them. I believe this should be the other way around. The property repossessions, as José Araujo pointed out, and rightfully so, it's still a very long or slow process. We should replicate, for instance, what is done in the tax sale procedure, which is much faster than the foreclosures. We should, for instance, issue property title with the award decision and the tax payment when we bid for a collateral. We should empower execution agents on all phases and decisions to accelerate this recovery, and we should clearly accelerate the eviction procedure, which is something that the investors don't understand, which is, I have bought a property, it's occupied by a squatter, for instance, and it takes ages to take possession of the property, and this is something that clearly jeopardizes the investment. The last thing I would mention is, and another one that the investors don't quite understand in Portugal, is the time it takes to get the cash that is sitting in court. Again, the investors have a hard time understanding why a property was bought by a third party, the cash is deposited in court, and why does it take so long to get distributed. A good measure that was recently approved was the pro rata distribution on bankruptcies. We believe that one measure that could be useful on this would be the release of cash in court to the first lien holders, retaining X% for court fees, instead of going through the entire process. That may take, for everyone to have an understanding, it may take 1-2 years to sometimes to get the cash from court, which is, again, something that penalizes the investment quite a bit.
Well,
yeah, and just adding to that, I mean, Mario mentioned a lot of specific items that are relevant, and I would say that the most thing that seems to be difficult to grasp is what you mentioned in terms of the registration and the links between what is the decision in the courts and the registration and the process moving forward, because what we see a lot with the mortgages and even the property when with REOs is that I mean, just giving a small example, an husband and a wife, they have a problem, they are condemned in court, and then it is sometimes a nightmare to have the registration totally updated, and it can take several, I mean, not going to say years, but sometimes more than 1 year to have things sorted out. So I agree with Mario that we have come a long way, but specifically in terms of how the courts are made and even the habilitation with courts, that again the mass assignment eased, but there's still a lot of problems with that. It is something that it would be helpful to simplify the court procedures.
Okay.
Well, market and to Marco be happy, the bank will still have liquidity to make loans. It's from loans and intermediation that the banks will live. But of course, we adjust the risk and not so leverage, maybe. Mortgage is not an issue for the price and the price for projects, for promoters and for everything. We have to adjust the risk, see the projects, good promoters. Maybe the system is not so open because the rating and the constraints and the pushing from Central Bank of Europe always demand a very precise way to look the risks. So, but we still on the market, we have liquidity and good projects that will be always financed, and that's no problem.
Well, it's amazing to know that. It's really important. We are just ending our time. Francisco, I have one last question for you, because I saw that you were super excited listening the legal frameworks, that I know it's always the best time of the roll-ups of the portfolios.
Yeah, I felt I was back in the roll-up.
But before giving a couple of seconds to each one to do final comment, my question for you is, when you have an investor coming into you and say, I want to buy portfolios in Portugal, Spain, Italy, or Greece, and how do you convince them to buy in Portugal? What do you say about the country, about the way we do the things, about the market, that can convince an investor? And some of them are listening now, so please think about what you'll say. But how do you convince an investor to invest in Portugal, and especially in this very complex market?
That's a very good question. Okay, first of all, small is beautiful. So Portugal is the smallest country, so why not Portugal, of course. But seriously, no, I think that things that have been mentioned here, the legal aspect that is improving, that has been improving for the last 10 years. And when I look at portfolios in Greece or Spain, I see the legal side is a nightmare compared with the Portuguese side. Registration also, when you look at Greece and you look at Portugal, Portugal is much better, not so good as the Spanish one, but we'll get there. So I think in overall, we have the excellent advisors we have here in Portugal, of course. So overall, I think we have good conditions. We have political stability. We have not only we are in the EU, but also we have the Portuguese countries market, like Brazil, where we can be a door to go to these countries, namely Brazil. And we have some investors that started working with us here in Portugal, and now they are working with us in Brazil. So we are advising them also in Brazil. So I think Portugal is quite a good place to invest at this moment, and many opportunities will come in the next future.
I think it's an amazing final word, Francisco. Thank you very much. I will also give a couple of seconds to also the other colleagues. José Araujo, what do you like to summarize and conclude in these last minutes?
Very professional, better legal system, even so, from the other countries from the south of Europe, and very trustful about the different foreign people who lives and work in Portugal, and finally liquidity to support some of those of buyers that comes to Portugal. That is the main points. If they look for less prices, don't go here.
Perfect. Thank you, José. Thank you very much. Gonçalo, the same for you. Final words, and what do you want to say to the investors that are looking to us now and try to convince them to come invest here in Portugal?
Yeah, very quickly. Just to mention that Portugal has its problems, but it's definitely the NPL scene, the NPL environment. I think it's a success story, and it's something that shows that participants in the market, be it advisors, sellers, and the entities that have purchased the portfolios, they did their work well, and they have gained experience and sophistication that is second to none right now in Europe. And on top of that, the new NPLs that are going to be created, as I mentioned, are different from the other ones. So there are good companies, good assets there, and for sure it's interesting for investors to go.
Thank you very much, Gonçalo. Marco, last but not the least, as you know, the final words, final comments about what we were discussing.
Yeah, I think the track record of the investors in Portugal speaks by itself, meaning I don't think any investor lost a lot of money in the NPL market in Portugal, contrary to what I saw happening in other countries. I think the banks are good sellers in Portugal. The processes are very well run by the banks and/or the advisors. I think we have very good servicers in Portugal, which is quite important as well. I mean, Araujo is in different markets, as you know, in Europe, and I mean, the servicing landscape in Portugal is much better than what I see in other countries, and this gives comfort, obviously, to the investors that come to Portugal. They know they will do the transaction because the track record is there. The banks are good sellers. The process is well advised. They are good servicers, not only to manage the loans or the portfolios, but also in the due diligence process, in the valuation processes. Guys like Prime Yield, Aura, etc., are very knowledgeable and valuable on that process as well. So I think we have very good providers, we have good sellers, we have good servicers, and we have a good track record. So and as Gonçalo mentioned, we've shown that we are able as a country to get off a crisis with a bang and do a very good job in getting back on track and improving the economy?
Well, I think it was possible to end with a better positive vibe. So the last thing I would like is to thank you for your time today. Francisco, José, Gonçalo, and Marco, thank you very much to share with me this hour and speak about this market. Thank you very much, and please keep safe and good businesses for all. That's also very important. Thank you very much.
Thank you to all.
Thank you. You too.
Thank you.